In our previous reel, we spoke about the nudge messages being sent by the income tax department, and we told you how they are not scrutiny notices and that they are based on data matching with AIS, TIS, and Form 26AS, and how you should verify your return first instead of revising blindly. Now, this reel is the most important continuation of that discussion, especially before 31st December 2025. Once you've reviewed your return after receiving a nudge, you have two possible paths, and the timing decides which path you follow into. If you identify a genuine mistake and correct it on or before 31st December 2025, you file a revised return. In a revised return, you pay the additional tax and applicable interest, if any. There is no extra penalty just for revising. But if you do nothing now and decide to correct the mistake after 31st December 2025, you lose the option of a revised return. After that date, the only option available is an updated return, which is governed by Section 139, subsection 8A of the Income Tax Act. An updated return is a special provision that allows the taxpayers to voluntarily disclose additional income or correct errors after the revision deadline, but it comes with additional cost and limitations. When you file an updated return under Section 139(8)(a), you must pay the additional tax payable, interest as applicable, and an additional tax penalty. This additional tax penalty is 25% of the tax payable if the updated return is filed within 12 months from the end of the relevant assessment year, or 50% of the tax payable if it is filed after 12 months. Let's understand this with a simple example. Assume you claimed an ineligible deduction, and after correction, the extra tax payable is rupees 1 lakh. If you revise return before 31st December 2025, you pay rupees 1 lakh plus interest. If you wait and file an updated return under Section 139(8)(a), you pay 1 lakh tax plus interest and an extra 25,000 or 50,000 as additional tax. Same mistake, but the cost increases only because of timing. There are also important restrictions with an updated return. You cannot file an updated return if the result is in a refund, it reduces your tax liability, or proceedings like search, survey, or assessments are already initiated for that issue. An updated return is only meant to pay more tax, not less. That is why the department is nudging taxpayers now before the revised return window closes. So connect this back to our previous reel. First, verify your return properly using AIS, TIS, and Form 26As. If there is a genuine mistake, revise your return before 31st December 2025 and save money. If everything is correct and supported by documents, no action is required. If you are unsure whether to revise or not, comment refund and follow us and get our checklist to decide correctly. Follow no tax.